Not everything went down in the last year. Some altcoins outperformed. Unfortunately, TonCoin was not one of those outperformers. Ton crashed by 74%. It went from above $6 down to $1.55. And it looks like that crash was justified. Just have a look at the capital that's on the Ton chain measured in US dollars. It simply just continues to go further down. When a project loses capital, it's only logical that the asset goes down as well. Now the turnaround happened in July of this year. The TVL went from 767 million down to 84 million. So a drop of almost 90%. Now, not all of that decline, especially the recent decline, is due to less usage of the Ton chain. Actually, when we measure the TVL in Ton directly, then this year we just went sideways. Isn't that fascinating? A lot of the assets on the Ton chain are of course directly linked to the Ton price itself. It seems like the activity on chain did not change, yet the price crashed by 74%. Have a look at the chain revenue over time. It seems to be relatively stable. Have a look at the app fees over time. It's even growing. Have a look at the decentralized exchange volume over time, measured in Ton. At least it's somewhat stable. Yes, there are no new inflows, but is this crash justified, or is there potentially a buying opportunity here? Here's a chart that hints towards the current prices being potentially low. This is Ton relative to the others market cap. So how is the Ton price performing relative to the rest of the altcoins? It seems like we tend to top out at similar levels. Are we also going to bottom out at similar levels? The current bounce that happened at the end of November seems to be aligning with the bounce in May of 2022. There is potential risk, maybe an underperformance of 22%, but there's also quite a lot of potential outperformance, more than 344%. How solid is that thesis? Is the current risk to reward for Ton potentially worth it? The problem is that sometimes those trading ranges do not stay intact. Have a look at Ton relative to Bitcoin, for example. We tended to trade in a range up until February of this year, but then we did not see the bounce. Instead, we established a downward trend. Now, why does the Ton chart relative to Bitcoin look that much worse compared to Ton relative to the altcoins? The answer is, of course, that Bitcoin had a lot of institutional support. This is the Bitcoin supply that's held by the ETFs. It continues to constantly increase, taking away actively traded liquidity, and that at least helps Bitcoin's relative performance. It might not be enough for the price itself to go up, but at least it's a catalyst that many altcoins do not have. And that's why Ton has a hard time beating Bitcoin, why many altcoins have a hard time beating Bitcoin long term. And so there's a good case to be made that because of that institutional demand, Bitcoin dominance will continue to go up. It's going up since September of 2022. Ton faces a similar issue to many other altcoins, and that is token inflation. The number of Ton tokens over time tends to increase, and that increase is potential sell pressure. If the project doesn't grow as quickly as the sell pressure, then that means that the asset has to underperform. There are two major drivers of the US dollar price. One of them is the macro environment, right? Where is Bitcoin and Ethereum and Solana going? This is usually also where the altcoins are going. But then there's also idiosyncratic movements. They're just specific to an asset. And those idiosyncratic movements are very much dependent on tokenomics. So how is an asset doing relative to the general market? Have a look at the accounts created per month on Ton. The trend is not very positive. Have a look at the total supply relative to the circulating supply. So the circulating supply still has the potential to more than double from here. And this is very different to Bitcoin, for example, where we've got 20 million that's circulating and 21 million that's the total supply. So the ratio here is much worse for Ton compared to Bitcoin. But the argument is that Ton might also have more upside potential. The fundamental question is whether or not Ton can grow faster than Bitcoin. This year, the answer, of course, is no. This year, we simply just went sideways in the TVL measured in TON. So there's a minimum growth hurdle rate for an altcoin, and that's dependent on how aggressive the tokenomics are. That's dependent on how quickly the insiders, the early investors tend to cash out. Let's have a look at some on-chain data. There's a ported version of TON on the Ethereum chain. That token, called wrapped TonCoin, has 38,000 holders. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. What you see on the left is the number of wallets that have at least 650 TON tokens. That's roughly $1,000 worth of the token. In the middle, it's $10,000 worth of the token. On the right, it's $100,000 worth of the token. We can see how the small retail investor stopped buying TonCoin in the middle of August of this year. So 1 month after the TVL in TON peaked. The behavior was very similar for the somewhat larger holders with $10,000 worth of TON, and the whales, they have not sold off. They are rather close to all-time highs, but also the sample size is very, very small here, right? We've only got 26 wallets that have at least $100,000 worth of TON on the Ethereum chain. TON was one of the assets that got hurt the most on October 10th, right? The flash crash, the crash where perpetual futures tended to push down everything in crypto. Investors that were betting on rising prices of TonCoin via the perpetual futures market all got wiped out. TON, over the course of 1 hour, fell by 80% to then afterwards recover again. But since then, it tends to be in a downtrend. Here is that 10th of October, 53 million worth of long liquidations. So that's all the traders that bet on rising prices that lost everything. And that has changed the market for TON. Have a look at this before. Before, the funding rate for TON tended to be positive most of the time. So there were quite a few investors that were betting on rising prices long term that simply just held TON via perpetual futures. Then came the 10th of October, where all of those people got wiped out. And since then, the funding rate tends to hover around 0. So the people that lost their allocation, the people that lost with TonCoin, they are not coming back. Here is the open interest on TON. So how many bets are made on TON over time on the perpetual futures? Again, we see our crash where open interest went from 300 million down to roughly 100 million. And interestingly enough, we do see another jump of open interest again. I do not know where this jump is coming from. It also seems like it did not have any net price impact. But something happened here on the 19th of November. Potentially some kind of unlock for the team, for some insiders that don't want to sell TON directly, that maybe use perpetual futures instead. And those shorts or those over-the-counter deals, they might have gotten purchased from the other side, namely the market makers. So something is going on here. I do not yet know where those more than 100 million of additional open interest come from. If you do know, then feel free to comment this down below. In general, it does appear as if TON is rather cheap relative to other altcoins. The sentiment is worse than the current situation. We do not see any outflows, at least measured in TON, on the TON chain anymore. Things have stabilized. Activity on chain is also rather stable. There's a good chance that altcoins in general are at least going to outperform Ethereum. Right? This is the others market cap relative to Ethereum. When the altcoins outperform Ethereum, that will, of course, at least relatively speaking, also help TonCoin. Will TON be able to outperform Bitcoin though? I'm not so sure. This trend tends to be rather stable. There's a good chance that your portfolio unfortunately looks like this. There's a reason for that. The altcoin market got crushed this year. And it was all those influencers that get money from those projects to sell you those altcoins. That's why you are in losses. The fundamental problem is the conflict of interest. The influencers get money, they talk positively about a project, but they might not even invest in that project themselves. They maybe get a token allocation that they then afterwards sell. I've not seen a single influencer on YouTube that's actually willing to share their own data, that's willing to share how they are trading, how they are outperforming just buying and holding Bitcoin. Because obviously the vast majority of altcoins does not outperform Bitcoin. Now I try to be different on this channel. I don't just share my own data of my own trading. I'm getting into the ring, trade for the members of this channel, and everybody can participate. So in July of this year, we started a premium capital pool, and every annual subscriber of the community had the option to invest. And while Bitcoin fell by almost 25%, we made 17% in gains. And it's not just the delta that I like, it's also the very low correlation. As in, when we went sideways, we made money. When we went down, we just lost a little bit. But in general, the strategy has very little correlation. It's very different to the general market where everything goes down, everything goes up at the same time. When prices are going up, it's not that hard to find winners. When prices are going down, it's much harder to generate profit. I want to share the data in a bit more detail. So the average depositor, by the way, we had several millions worth of deposits. The average member deposited 17.6K at the end of the 5-month period. That turned into 20.3K, so an average profit of 2.7K, which equates to 13.4%. Now after a 10% fee, that ends up at 12%. Now 13.4 is different to 17.3 that I showed over here. And that's because a lot of members first waited before depositing. They didn't enter on day one. They first wanted to see how some profit got generated. And because of that delayed exposure to that capital pool, the average return is lower compared to the return if you started on day one. But of course, the real number that matters more is the performance from the very beginning. If we then annualize this, we get to a value of 45% or 40% after fees. If you bought and held Bitcoin during that time, you lost. If you went into the capital pool, you won. If you measure your capital after that 5-month period in BTC, then you'd now have 1.51 BTC after fees. And so those are the kind of numbers I do not see any other influencers sharing, right? Most people just say buy this token, or I called it right over here and I made it all correct over there. But really, when the rubber hits the road, when it's really about proving oneself against the market and potentially also showing this very transparently to a community, then very few people are willing to do this because it's hard to beat the market. It's much easier to just record videos, keep yapping, pretend to know everything. And while I'm not saying that I know everything, and while I do have bad trades as well, I am at least getting into the ring. I'm at least showing what I'm doing. I'm willing to share whatever success or failure I produce in the market. Now this is just a test of 5 months. Here is my personal trading results over the last 5 years. So this is the monthly alpha over buying and holding Bitcoin. This averages out to 1.6% per month. The dotted line over here, that's the 12-month average. Had I just dollar cost average into Bitcoin, I would have gotten the return by this white gray line. But because of relative valuation trades, because we made money when everybody else was losing, we are able to outperform just buying and holding Bitcoin. That's the hard part, right? We always need a benchmark. When everything goes up and we just take on more risk by buying an altcoin, of course we can outperform. But if things go sideways, if things go down, that's where we can see who's actually swimming naked. When the tide is going down, that's when things get tough. So it seems like you're still around. Even after all of those losses, you still try to learn about crypto, and I applaud you for that. But probably if you haven't made any money in the last year, it's better to change gears. So you can simply just trade whatever I trade actively. So I'm sharing every single trade that I do in real time in premium. That's $125 per month. And because I'm having a good day, I'm sharing one trade here for free. That's actually a premium trade, which is Pudgy Penguins relative to Solana. So you're going short Pudgy Penguins, you go long Solana, and just trading this long-term trend. And if you're making money with that trade, feel free to reinvest this into premium if you don't want to make the jump yet. But Pengo is one of those highly inflating tokens, and it still has a lot of room to fall, especially if the market overall continues to suffer. But then, of course, if you don't want to do the active trading part, you can also join the next premium capital pool where the trades will be executed automatically. This time it will not just be 5 months, but 12 months of trading. There is the manual route. There are several tutorial videos on how to set up all those positions. It explains how to make money when Pudgy Penguins continues to fall, how to have proper risk management in place, and how to execute everything manually. But if you don't want to go the manual route, then instead of subscribing monthly, you can subscribe yearly. Now, currently, this is still crossed on the website. This will get updated very soon. The next copy trading vault will launch in January of 2026. And so feel free to join. It's 10 months of premium, right? It's $1,250. You can also just start off with the monthly subscription and then switch over to yearly afterwards. But if you want to start out with yearly directly, again, if we are able to keep the current returns, which of course is a big if, right? Nobody knows if this rate of return will stay. But if this 5-month test is representative of what's going to happen in 2026, then the break-even point for premium with the $1,250 is an investment of roughly $3,000. So you don't necessarily have to go in with 17K, right? Once you go in with a bit over 3K, you already have all of the content for free. And it's not just tutorials, there's also premium updates. There's also various on-chain tools, etc., to help you improve your crypto game. If it's the very first time here, feel free to give this a like. It will help the channel grow. Feel free to also subscribe. I publish videos regularly. There's a link to premium popping up here on the screen. Just click on that. It will lead you to the website. See you next time on YouTube or see you in premium. Cheers.